There's a tiny company in Maryland that just hit a world record in quantum computing. Better accuracy than Google, better than IBM, better than anyone. But here's the thing, it's bleeding cash, fast. Most people still think quantum computing is science fiction, yet the US government just handed this company over $100 million in contracts, and it's not slowing down. But here's what no one's talking about. This company just raised $2 billion by flooding the market with new shares, right after its stock hit an all-time high. So is this the future of computing, or just another hype bubble ready to pop? Let's talk about IonQ. This is a pure-play quantum computing company. Founded in 2015 by two physicists out of University of Maryland, it went public in 2021 through a SPAC deal, making it the first publicly traded quantum computing company in the world. And over the past year, the stock went absolutely parabolic. We're talking a climb from under $15 to over $80 by mid-October 2025. That's a 440% spike at the peak. Then it crashed 30% in just a few weeks, settling around the mid-50s. Still up 273% year over year, but the volatility tells you everything you need to know about what kind of ride this is. So what does IonQ actually do? They build trapped ion quantum computers. Without getting too deep into the physics, imagine manipulating individual atoms, literally ionized atoms, to perform calculations. These aren't your regular computers. They don't use transistors or silicon chips. They use quantum mechanics. And the potential? It could revolutionize everything from drug discovery to cryptography to AI. But here's the kicker. IonQ doesn't sell these machines, they rent them out. You can access their quantum processors through Amazon Web Services, Microsoft Azure, or Google Cloud. Researchers, enterprises, even governments can run quantum computations on demand. That's their business model, quantum computing as a service. And it's working, sort of. In Q3 2025, IonQ reported revenue of $39.9 million. That beat analyst expectations by 48%. It was more than triple what they made the year before. They raised their full-year guidance to $106 to $110 million, basically tripling their 2024 revenue. That's explosive growth on paper. But here's the reality check. They're still tiny. Trailing 12-month revenue is only about $52 million. And their net loss in Q3? Over $1 billion. Yes, billion with a B. Now, most of that was from one-time acquisition charges, but even on an adjusted basis, they're losing tens of millions every quarter. Free cash flow over the last year? Negative $155 million. This is a company burning through cash to chase a breakthrough that may still be years, maybe a decade away. But let's talk about why people are excited. IonQ just achieved something huge on the tech side. They hit 99.99% 2-qubit gate fidelity. That's a world record. It means their quantum operations are incredibly accurate. Accurate enough to start building what's called fault-tolerant quantum computers, which is the holy grail of the industry. They also hit their 2025 milestone 3 months early. They reached what they call HAC 64, basically a measure of quantum computing power. And according to their CEO, that unlocks a computational space 36 quadrillion times larger than leading superconducting systems from IBM or Google. Pretty wild, right? They're also expanding fast. In Q3, they completed 2 big acquisitions. First, they bought Oxford Ionics, a UK startup focused on quantum networking and modular ion trap tech. That's going to help them scale up their systems by connecting multiple quantum modules together. Second, they acquired Vector Atomic, a California company that makes quantum sensors for navigation and timing. This isn't just about computing anymore. IonQ is now entering adjacent markets, like quantum sensing, which has huge defense and aerospace applications. And speaking of defense, they just launched IonQ Federal, a dedicated division to serve U.S. government clients. They've already got over $100 million in federal contracts with agencies like the Air Force, DARPA, and Oak Ridge National Lab. They even brought in a former U.S. intelligence director to run it. So on one hand, you've got a company hitting milestones, securing government backing, and growing revenue at triple-digit rates. But on the other, the valuation is absolutely insane. Around $55 a share, IonQ's market cap is about $19.3 billion. For $52 million in trailing revenue, that's a price-to-sales ratio over 368 times. Even using their raised guidance for this year, it's still around 175 times sales. To put that in perspective, Nvidia at the peak of the AI boom was trading around 40 times sales. Most high-growth software companies trade under 20 times sales. IonQ is in a completely different stratosphere. This is a stock price for perfection. The market is betting that IonQ will eventually generate billions in revenue and dominate the quantum industry. But if anything goes wrong, if they miss a milestone, if a competitor leapfrogs them, If adoption takes longer than expected, this thing could collapse fast. And here's where it gets even messier. Insider selling. Over the past few months, executives have been unloading shares. The co-founder Peter Chapman sold nearly 1.5 million shares in June around $40, then filed to sell another 800,000 shares in October near $80. The CFO sold over 150,000 shares during the summer rally. The CEO trimmed his position. Other executives did the same. Not a single insider has been buying. Not one. Now, insiders sell for all kinds of reasons. Diversification, taxes, personal liquidity. But when you see this much selling and zero buying, it raises a question. If the people running the company aren't buying at these prices, why should you? And then there's the dilution. In October, right as the stock hit its peak, IonQ raised $2 billion by issuing new shares. That diluted existing shareholders by roughly 10 to 15%. The stock dropped 30% in the weeks that followed. And to be fair, that $2 billion gives them a massive cash cushion. They've got $3.5 billion on the balance sheet now with almost no debt. That's enough runway to fund their roadmap for years without needing to raise more money or worry about bankruptcy. But it also signals something. IonQ isn't generating enough cash internally. They had to sell stock to keep the lights on and fund R&D. And if they need to raise again down the road, that's more dilution. So where does that leave us? Here's the bull case. IonQ is the leader in a technology that could redefine computing. They're hitting milestones, growing fast, and backed by the US government in what's essentially a new tech arms race. If quantum computing takes off in the next 5 to 10 years, IonQ could become the Intel or IBM of the quantum era. That's a multi-bagger scenario. Here's the bear case. The stock is priced like they've already won, but they haven't. They're years away from profitability. They're burning cash. They face brutal competition from Google, IBM, Microsoft, companies with trillion-dollar resources. And there's no guarantee IonQ's trapped ion approach will be the winning technology. If superconducting qubits or another method surpasses them, this whole narrative falls apart. And let's not forget, quantum computing itself might take way longer to commercialize than anyone expects. Some experts say true, large-scale quantum advantage is still a decade out. If the hype deflates before the tech delivers, IonQ stock could crater, even if the company is doing everything right. So what's the verdict? This is a hold. And I mean that in the most neutral, speculative sense. If you're already in from lower levels and you believe in the long-term quantum story, holding makes sense, but size your position carefully and be ready for wild swings. If you've made big gains, taking some profit isn't a bad idea either. If you're thinking about buying now, tread carefully. This is not a safe play. You're betting on a technology that's still being figured out, on a company that's years from profitability, at a valuation that assumes almost everything goes right. That's a lot of risk. For the right investor, someone with high risk tolerance, a long time horizon, and money they can afford to lose, IonQ could be a lottery ticket to massive returns. But for most people, this is too speculative at current prices. What I'd watch for: can IonQ keep hitting milestones? Can they turn partnerships into real recurring revenue? And can they maintain their tech lead over IBM and Google? And can they do all that without burning through their cash or diluting shareholders again? If they pull it off, this could be one of the biggest growth stories of the decade. If they stumble, it could be one of the biggest collapses. So yeah, IonQ is fascinating. It's got moonshot potential, but it's also got moonshot risk. And right now, the market's already priced in a lot of that dream. Keep your eyes on this one, but don't bet the farm. And hey, I hope this video helps you on your quest for profits. Catch you on the next one.